Welcome back to this Money Control live stream. We're watching Closing Bell with me, Nandita, Khemka, and my colleague sitting right next to me in the studios after a long time.
Yes, hello there, I'm Yatin Mota.
Well, Yatin, a good day of trade, given the fact that it was the weekly FNO expiry, the second Tuesday weekly expiry, so to say, and we didn't really witness the kind of volatility that we usually witness on expiry days. Today was a steady day, although we started on a muted note. But we picked up steam. In fact, the Nifty cleared the 25,250 mark on the upside. 25,261, that's the swing high for today. And I think that will become the crucial level to watch out for in the coming sessions as well. But yes, we picked up momentum. Yesterday, it was a day-long break that the bulls took after 8 days of sprinting. They took a break, they rested it out, and they came back with a lot of vigor as well. But yes, 25,200, we managed to close above that level. So we'll take heart from that, because a lot of experts were of the view that once the Nifty sustains that 25,200 to 250 mark, there are chances that we may see a retest of 25,400 to 25,500 levels. Let's see what the outcome of that US-India trade talk is. Today, of course, we have the US chief negotiator Brendan Lynch in the country, in the New Delhi. They will be holding talks with their Indian counterparts. So yes, all eyes are on that and what really comes out of it, because earlier as well there were a series of tweets exchanged between Trump and Prime Minister Modi, and there were signs of a thaw emerging. And now with these day-long talks, let's see what positivity comes out of it. The markets, of course, will be reacting to that as well. Of course, we also have the FOMC meeting outcome tomorrow night. We'll be reacting to that as well. But in terms of today's market action, broader markets also continue to do well, Yatin. But today, it was the large caps that took the lead. We saw the Nifty, of course, clocking in over 0.5% kind of an up move. All the sectors, barring the FMCG pack, ended the day in the green. Also, two important facts, Yatin: autos have regained their momentum, and banks were struggling to reclaim the 55,000 mark. Today, the Nifty Bank Index has also managed to close well above that 55,100 mark. So that end of the spectrum, if it keeps or if it starts firing, we may, of course, look at higher levels on the Nifty as well. Let's take a look at some of the individual movers then. In terms of gainers, you had the private banking names like Kotak Bank, that was among the top Nifty gainers. L&T, we've had some order wins today. That stock was also up and about. You have M&M and Maruti. These were the stocks from the auto basket. Even Eicher Motors, for that matter, among top gainers. Bharti Airtel, Tata Steel, Axis Bank, JSW Steel, Grasim. These are some of the other movers. What didn't do well were the likes of Tata Consumer, Asian Paints, Nestle. So some of these consumption names continuing to see profit taking. HDFC Bank also ended the day in the red, even though the Nifty Bank Index was in the green. But a good point is that all these losers, they didn't lose in excess of 1%. So losses were also fairly measured. But Yatin, broader markets, there were quite a few high flyers. There were textile stocks that were doing well. Also, Reddington, that stock was up somewhere around 20%.
Yeah,
Reddington,
or so. And I don't know the probable reason why the stock was up, but I guess it's the iPhone launch which is probably doing well in the marketplace. And Reddington, is one of the premium distributors for Apple products in India, including the iPhone. Probably the markets would be looking at better sales from the new iPhone which has got launched, but I'm not sure if this reason suffices the stock to move 20% in trade. What was also doing well is Aegis Logistics, and we'll talk about the stock in detail after the JP Morgan report. The stock was doing well. JBM Auto, HBL Engineering, after a stellar run-up in the last 1 month or so, stocks were witnessing some bit of profit taking. Godrej Consumer Products, Marico, all of these stocks were slightly under pressure. But yes, stocks like Amber Enterprises, Aadhar Housing Finance, Hyundai Motors, all of these stocks are now trading above that 52-week high levels.
All right, those were some of the movers, quite a few high flyers when it comes to the broader end of the markets. But let's talk about some of the stocks that will be in our radar. But before that, just a message for our viewers. Introducing Moneycontrol Super Pro, your ultimate investment superpower. Get live calls, trading and investment ideas from SEBI registered experts, pre-identified chart patterns and AI-powered stock alerts on WhatsApp to help you trade and invest with confidence. Super Pro, where serious investors stay ahead. Download the Moneycontrol app and subscribe to Super Pro today itself. On that note, take a look at some of the stocks that are on our radar this afternoon. Yatin, banking universe is in focus. Of course, We know that, if you compare the charts of Nifty Bank with that of Nifty over the last 1 month, you will see divergent moves.
Yes.
Nifty is up 1%, Bank Nifty is down 1%. Markets were really waiting for the Nifty Bank or banks to actually fire up so that we could conquer higher levels, because the bulls have had a good run. It's not been a one-way move, but every day we've seen step by step some gains on the screen. And finally, we did manage to clock that 25,250 level today. But, if banks would have fired, we would have clocked that level, much earlier. But let's talk about banks as a whole in terms of where the earnings trajectory is heading from here. We have Motilal Oswal that has come out with a report on the banking universe, where they have a much more bullish view compared to the consensus on the street, because a lot of brokerages and street has actually started downgrading banking earnings as well, given the fact that there has been slower loan growth, margin pressure has been there, and funding costs, especially in the unsecured segment, has been on the higher side. Now, banks are grappling with the transmission of rate cuts, asset quality stress in unsecured segments like MSME and CV, continues to weigh on near-term profitability as well. Now, consensus estimates for private banks have been lowered by anywhere between 5 to 14% for FY26 and 1 to 6% for FY27. For PSU banks, although the earnings cuts have been fairly milder for the same period. The steepest cuts were witnessed in mid-sized private banks with exposure to MFI sector like Bandhan Bank, Equitas, IDFC Bank, RBL Bank, etc., with earnings cut being in the range of 41 to 95%. That's the kind of earnings cut that have come in for these mid-sized private banks. But large diversified banks like ICICI Bank, HDFC Bank and SBI on the PSU side have shown resilience, and which is why the earnings cuts for these particular names have been modest. For Motilal Oswal universe, for FY26 and FY27, earnings growth estimates are broadly in line with the consensus that they are expecting 1 to 3% kind of earnings growth in FY26 and FY27, though they are more optimistic on the mid-tier banks like RBL Bank, DCB and IDFC Bank, where they expect FY26, FY27 earnings in the range of 4% to 17%. That's the earnings growth estimate for these banks. And for PSU banks like Canara Bank and Bank of Baroda and PNB, it's anywhere in the range of 6 to 16% for FY26 and FY27. That's because of the margin stability that these banks have shown. Of course, consensus estimates are showing or pointing to muted earnings growth of somewhere around 2% in FY26 and a rebound of 16% in FY27. Of course, that would be led by deposit repricing and the calibrated CRR cuts that the RBI has also announced, and of course, improved credit costs also going forward. But Motilal Oswal forecasts a 17% EPS compounded annual growth rate over FY26 to FY28. So, they are tad more optimistic than what the consensus is really throwing up. They are also saying that a turnaround is within reach when it comes to banking earnings, especially from the third quarter, which is likely to see a growth vis-a-vis a deceleration in Q1 and Q2. And of course, banks with strong liability profiles, robust balance sheets and prudent risk management, these are some of the banks that are best positioned to navigate the near-term challenges. For Motilal Oswal, the top ideas are ICICI Bank, HDFC Bank and SBI, and within the mid-cap universe, they prefer AU Small Finance Bank. So yes, consensus is building that there could be a turnaround inside, but Motilal Oswal is a tad more optimistic and it expects third quarter to be the quarter when we see a quarter of growth vis-a-vis quarter of deceleration in Q1 and Q2, Yatin.
Right, and obviously banks are now catching up. Good day for the banks, but also for the logistics players. Nandita spoke about banks, and today Brooks is also speaking about the logistics players. Now, JP Morgan has initiated coverage on 3 logistic companies. The first being Delivery. They are overweight on the counter with a target of 575. Remember, the last quarter we had seen strong numbers from Delivery in terms of margin performance. They also have announced one acquisition in which there will be further chance or opportunity to scale up. JP Morgan believes that the EBITDA acceleration will continue for Delivery. As far as Aegis Logistics is concerned, they are overweight here with a target of 895. And remember, the stock was one of the top gainers in the Nifty 500 today, gaining by nearly 7%. The company is also on a roadshow, by the way, which is probably helping them. TCI Express, obviously due to valuations, the target remains at 750. They are neutral on the counter. However, they believe that the worst is behind. And probably from here on, you could see some EPS upgrades for logistics companies. They are also neutral on Container Corporation with a target of 590. Obviously, Container Corporation hasn't been able to, get higher volumes because they have been guiding about 20-25% volume growth, which they have now toned down. So that stock has been a big underperformer. However, they believe that the B2C e-commerce segment will see a 16% growth till FY30. And Aegis Logistics, the stock we were talking about, that will probably be a big proxy play on LPG imports and port capacity expansion. So yes, Aegis Logistics probably stands out when it comes to the JP Morgan initiating coverage report, with the shares gaining by nearly 6-7% in trade.
That's true, Yatin. Even the fact that GST cuts could lead to higher consumption and higher demand, these logistics firms will also benefit because of that, right? So the likes of delivery also stand to gain. So yes, GST cuts and of course benefiting consumption players and logistic players as well. From logistics, let's say cheers to liquor stock, alcohol beverage stock, United Breweries. You know, liquor stocks have been in focus. Yesterday, we had a report from Jefferies as well, where they had pointed out that United Spirits, Radico Khaitan, these stocks are expected to do well. In fact, it called Radico Khaitan a dark horse going forward. Also because of the fact that entry barriers to in this segment is fairly high because of state regulations, which bodes well for well for existing players. So that's another thing that could benefit the likes of United Breweries as well. But today there is a JP Morgan note wherein they have an overweight rating on the stock. Target price is at 2050, although they have scaled it down from 2200 rupees. It still implies an upside of 14% from yesterday's close price. The stock is down 10% in the last 2 months vis-a-vis flat moves on the Nifty. Now, the brokerage believes that this offers a very attractive entry point for investors, and it's a compelling entry point when it comes to the shares of United Breweries. They've also noted the fact that second quarter was marked by heavier than usual monsoon rainfall in key states, and of course that did impact demand for summer products like beer consumption. Of course, beer sales were hit because of that. But the good part is that the input costs were fairly stable, raw material costs remain stable, and good return bottles ratio is something that is expected to aid margins also going forward for the company. The company is focusing on premiumization. Of course, the sharper go-to-market strategies also will help the company outpace the broader market going forward. But due to the weaker monsoon and weaker volumes, they have cut their FY26, FY27 EBITDA estimate by 8%. Of course, sales were hit, so volumes have taken a hit. And for second quarter, of course, which is why they have cut the FY26 and FY27 EBITDA estimates. In terms of the volume growth for FY26 and FY27, they are seeing that in the range of 6 to 7%. But second half of FY26 is when a full recovery is expected to kick in. Now, UBL is a company that owns the iconic brand Kingfisher and Kalyani Black, etc. Of course, in the June quarter, it reported double-digit volume growth of 11% or so, and the premium portfolio also grew somewhere around 45-46% or thereabouts. For the premium segment, I think they are expecting a 25% growth for FY27 going forward. In fact, management, has been making a case for distinguishing beer from other alcoholic beverages, because of course the alcohol content in beer is just under 6%, right? So which is why they are making a case for different treatment when it comes to tax considerations when it comes to this particular company. They've also been flagging off supply issues, especially concerning packaging materials like aluminium cans. But of course, even then, they are pretty much hopeful of clocking in 6 to 7% kind of volume growth in FY27 going forward, and 25% kind of growth in the premium brands. The stock recently hit a 52-week low as well, Yatin. But let's see, even though Q2 was marred by heavier than usual monsoon and beer sales got hit, brokerage is also fairly optimistic because of no changes in raw material costs And of course, the fact that I mentioned that Jeffries also mentions that the entry barrier is pretty strong. But of course, a lot will hinge on revival in the second half of the current fiscal. That perhaps would lift the spirits of United Breweries. But for now, the stock has underperformed. In the last year or so, it has lost somewhere around 14% or thereabouts.
Absolutely. In general, liquor stocks have been underperforming, but I think now the GST taxation is quite normal. Now the markets probably are aware that we could see some improvement in demand once monsoon is off. Probably in the peak season we could see some better volume. But yes, from air conditioners to probably beer makers, the unusual low temperatures have an impact on both beer as well as AC sales.
That's true, Yatin. That was about all the stocks that we had on our radar this afternoon, but there's plenty to watch out for. As I mentioned, the meeting between the US chief negotiator and New Delhi today, that takes significance. I think throughout the evening we'll keep getting updates on that. So stay tuned to Moneycontrol for all the latest on that. And of course, we've got the FOMC meeting kicking off tonight. We'll get the outcome tomorrow night, but US markets have been hitting fresh highs almost every other day. So global cues have been fairly supportive. Let's see whether we can extend the rally that we saw today and whether we can clock in that 25,300 level tomorrow. Our fingers are crossed, but with that, of course, we've come to the end of this edition of Closing Bell. From me and Yatin, thanks a lot for tuning in. But before I go, message for our viewers, introducing Moneycontrol Super Pro, your ultimate investment superpower. Get live calls, trading and investment ideas from SEBI registered experts, pre-identified chart patterns and AI-powered stock alerts on WhatsApp to help you trade and invest with confidence. Super Pro, where serious investors stay ahead. Download the Moneycontrol app and subscribe to Super Pro today itself.